Hello everyone, I'm Dan Basse, president of AgResource Company, joined by Dr. Bill Tierney, here to discuss just a little bit of what's happened a week ago, the U.S. election, Donald Trump, and what it means for the ag markets and the commodity markets in general. Since his election, Bill, we've seen a big rally in U.S. interest rates. The U.S. dollar today is sitting at a 13-year high. Chicago grain prices have declined. I don't think a lot of that is tied to Donald. I think it's more of the WASDE report that came out last week. But nonetheless, as we think forward, what does this mean for American farmers?
Well, I'm willing to address that over the next 18 months or so. And I think you identified the most important single factor, most likely to impact agriculture, is what happens to the value of the dollar and what happens to the currencies of two principal trading partners, specifically Mexico and China. From what I can understand regarding the things that are supposedly being proposed by the Trump administration, we're likely to see continued upward pressure on the dollar. We're possibly likely to see continued downward pressure on the peso, possibly the Chinese yuan, and unfortunately there is the risk of a trade war, or some kind of trade retaliation with respect to Mexico and with respect to China. So I think those are possible negatives for the outlook for U.S. exports. And if exports are going to be negatively impacted, I think prices will be impacted as well.
Saying that, as we think about the balance sheets of corn, soybeans, and wheat today, and maybe I want to focus more acutely on soybeans and corn, you know, USDA is using some very lofty demand numbers already in terms of bean exports, in terms of corn exports. Do you think there's any upside surprises in terms of demand forthcoming, assuming normal weather in South America?
Assuming normal weather in South America, we're already probably at the historical high end of the range that one could reasonably expect U.S. exports to be at. If the South American crop comes in as currently projected, there is a possibility that U.S. soybean exports may not achieve the record 2.05 billion bushels. U.S. corn exports are also at projected to be one of the highest levels. I think it's the fourth or fifth highest in history. And there again, if the South American crop comes in as projected, we're going to see very intense competition from corn and soybeans both.
So for U.S. farmers or for world traders, we probably have made our highs, early seasonal highs, but then I'm saying post-harvest rally highs, came early, like right after harvest, if we think about this now. Maybe, you know, December corn making it up to 360, soybeans making it up to, you know, 1020 or 1025 a bushels. Unless we have a weather problem in South America, I would imagine that those were the highs. The question of how far we peel back is a functionality of weather in South America, farm selling, and the value of the dollar.
Well, there's one other factor that in particular presents a threat for soybeans, and that is how many acres farmers may plant next year. Just today we saw another analytical firm came out with an estimate of 88 million acres, record 88 million acres that farmers will plant next year to soybeans. We're thinking maybe 85 million acres, 85.2. That again is also a record. If we indeed see U.S. soybean ending stocks at 480 to 500 million bushels, if unfortunately you take off 50 million or 75 million off of the export projection, and then you add 85, 86 million acres planted for next year and trend yields, it's very hard not to see soybean soybean stocks growing even further next year, putting significant downside pressure on soybean prices in 2017.
My name is Dan Basse, joined by Dr. Bill Tierney. Thank you for joining us. We'll be back again.